Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. This is Tuesday, the 28th of February. I'm Daniel Lam, your host for the podcast. Yesterday afternoon, I had to oversee the delivery of new furniture to prepare for the arrival of our baby girl. It was the first time in 8 months that I had to work from home. And it did allow me to look at charts in a relatively quiet setting because my baby boy was at school. And I noticed that the DXY index has been grinding higher very steadily. So let us dig deeper into this. The DXY index is testing key resistance at 105.63. Now, if it does break that level, then it would most likely be testing the next level at 107.20. The price action is consistent, and technical indicators are showing increasing momentum to the upside. Yes, we continue to believe the dollar is likely to weaken on a 6 to 12-month horizon, on potential Fed pivot in the latter part of the year, the narrowing of net interest rate differentials, and falling geopolitical risk. However, over the very short term, i.e. the next few weeks, there could be upside momentum ahead in the US dollar. From the macro angle, investors are beginning to gravitate towards a stagflation scenario due to such strong US data, starting from the non-farm payroll earlier this month to the most recent PCE data. This leads to thoughts about the Fed needing to hike rates more than what is currently priced in by the markets. From the technical angle, because a number of the quote-unquote long US dollar crosses have triggered long-term momentum signals, this is likely to bring about short-term buying by trend-following CTAs. On top of all these, China, which is the one factor that has been helping the long rest of the world versus US trade, has not been doing so well over the last few weeks, with underlyings such as the Hang Seng Index and the CNY in correction territory. For example, the HSI is beginning to test the support level at 19,300 to 19,600, and ongoing geopolitical tensions is acting as a headwind for the HSI. Of course, a stronger US dollar over the next few weeks would pressurize risky assets in general. However, our view is that this is likely to be temporary and may lead to opportunities across risky assets. So stay tuned to this podcast, and we'll be giving you thoughts on further developments and potential investment opportunities when the time comes. Thank you very much.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.